China's recent economic data has raised concerns about its growth prospects. Let's hear what Zhu Guangyao, China's Vice Finance Minister, had to say on the subject over the weekend.
Well, IMF Chief Christine Lagarde warns of a hard landing in the Chinese economy, and China's Vice Finance Minister, Zhu Guangyao, said China doesn't agree with this analysis and that U.S. monetary policy is the main wildcard.
The Federal Reserve has said it will increase interest rates if the economy stays stable after ending QE tapering. That move will have an impact on the U.S. and the world economy, of course, as well as China. So we are very concerned about U.S. monetary policy decisions.
Well, the IMF urges China to curb risks in shadow banking and asset quality. Mr. Zhu says the problems are controllable.
Does China have a shadow banking problem? Yes, we have, but its nature and content differ from the Western concepts. Our shadow banking is mainly shown in trust funds, which are off balance sheet. Their total amount is not too big, but the challenge is the fast pace of growth. Meanwhile, we note that the shadow banking could also support the real economy, so we'll be very careful in dealing with it.
Zhu Guangyao says China will stick with the structural reforms in the face of both external and internal challenges. 明天 CCTV.
China will be releasing first-quarter growth numbers on Wednesday, and the markets are expecting lower than target growth. CITIC Securities puts the growth rate at 7.4%. That's a notch lower than the government's full-year growth target of 7.5%. CITIC says despite a sluggish property market and related services, the rise of new services will support the tertiary sector. Shenyang Wanguo Securities also holds the 7.4% forecast. The brokerage says that with stable employment, the government may use more policy tools to push ahead with the economic transformation. Meanwhile, investment bank CICC is less optimistic. The investment bank put China's first-quarter growth at 7.3% because of what it sees as sluggish domestic demand.